Welcome to the Investor Agent Podcast. I'm Steve Seymour, your host, where we help transform the human mindset from scarcity and lack to abundance and wealth, one conversation at a time. Steve Seymour here with the Investor Agents Podcast. Today we have Matt Gorham. Thank you, Matt.
Hey, I'm excited to be here. This is a lot of fun.
Yeah, man. Thanks for being on. So, I hear lots of great things about your real estate business and your investing business, and we want to learn a little more, share some knowledge and experience with the guests. So I do like to start off with what got you into real estate investing?
In the investing side of it,
yeah. If you started with the license, business, you could start with that, and then how it transitioned. But
I had a contracting business, and I had it franchised in different states. But I was staining decks. I was painting them. It sucked. And I was bringing guys in on H-2B visas, and then I would lose them. And then the winter, I lost all my employees because it was weather dependent. I needed something to do in the winter to try to keep my employees. The retention of the employees was killing me. So what I did was I went and got my real estate license. A friend of mine handed me the Rich Dad, Poor Dad book. I read it, and it blew my freaking mind.
That book's changed so many people's lives.
It blew my mind. I was like, oh, I need to invest in real estate. I didn't realize I was going to be a realtor. I had zero idea that was going to happen. Got my license.
Said it's a deck staining business.
Yeah, the deck guy. 888 deck guy, deckguy.com.
Oh, wow.
We did well.
I had no idea. I didn't know.
So I had that for a long time. Okay. We got the Rich Dad, Poor Dad. I started getting my license. I started calling my boys, telling them what I was doing. I did not know that was prospecting, but it turned into a fun thing. So we bought our first investment shortly thereafter while I was still doing two jobs. And I thought that was a great idea, except for I didn't know how to flip the house. And I didn't know how to teach the guys that were working for me how to do it. So that was kind of a failed experiment.
That's how you learn, right?
Yeah, man. It was an education expense. I don't mind that.
So your first one, it sounds like you learned a lot. Tell us a little bit about that.
That was a pretty good one. Yeah, it was my wife was actually giving birth the day after. I couldn't get her to. My ex-wife, she was not terribly interested in investing. We have birth of my now 17-year-old son. The day after, I'm like, yo, this deal popped up. I'm gonna go. I went and looked at the house. Man. I bought the house for like 97% loan with seller assist. And, we bought it, and it worked out pretty good. I had tenants in there for a while. I didn't know how to check them out. Ended up being MS-13 gang members. And they were nice to me. I'd show up for rent, and they'd give me a Modelo and a bunch of cash. But they started tatting themselves up on the front porch. And I'm like, this is probably not going to work. Yeah. One day they got a citation from the city of Coatesville for an unregistered car, and they thought that meant INS was showing up or something. I don't know. And so then they left me with a house that needed a lot of work.
So it sounds like you almost just stumbled into the real estate investing business. I mean, you read Rich Dad, Poor Dad, 100%. Got your mindset, but then you're like, let me just go buy property.
100%. Yeah, but as I was getting involved in the real estate sales business, I'm watching other people grow wealth that I admire, and I'm like, how do you grow this wealth? And I've seen stocks go to zero. I've never seen a real estate property go to zero unless you did something, you didn't insure it properly, or you just you make the money at the buy, right? You can make the loss at the buy, or also, but like, I just didn't see anybody ever lose that had it. I wanted to have an asset so that if I was having a rough time, I had something to sell. I wanted to have assets. Like, you play Monopoly, you buy assets, right? I mean,
yeah, that game teaches a lot at a young age if you actually pay attention to it. I hustle my young kids on
that. There's no mercy in that game. Yeah.
So you also mentioned that you saw other people creating wealth around you with real estate. Yeah, was that a big influence?
It was a big influence. I was watching, some people were dabbling in new construction. Some were dabbling in multifamily. Some were flipping. I kind of just watched it for a while, and I learned from it. I asked a lot of questions.
Yeah, and you're like, these guys aren't any smarter than me. What the hell are they doing? Yeah.
They probably are.
They might be, but
they might be. That's a good possibility.
But it's monkey see, monkey do. You're like, they can do it. It's not rocket science, man.
There's opportunity for everyone, and that's why I love your abundance mindset. Like this, you don't have to be a genius. You don't have to have millions of dollars to be a real estate investor.
No, and you don't need that much real estate to become wealthy. And there's plenty out there.
There's a ton of it, and I struggle with that sometimes in the real estate sales space where people are just like, oh man, how am I going to find these listings? dude, there's plenty, man. Like,
And
I lost a listing yesterday to another agent that's really good that I respect. I thought I had it. They verbally committed to me, and then I saw it on the coming soon yesterday.
Oh, man.
It was a kick in the nuts. But you know what?
Get over it.
Yeah, man, move on. Like, you win some, you lose some. I'm going to go,
Next.
Yeah, man. Like, I called them and I told them that they made a good choice because their agent was really good. I didn't call them and say, what the heck?
Yeah.
I wanted to learn what I did wrong, but like, there's next.
Yep,
That's right.
Exactly. Yeah, you mentioned abundance mindset. So that's something that I know you embrace. Did you ever like struggle with that? Was there ever a point where you had to like embrace a new philosophy to grow into this mentality of like, I can do this. I do have enough, because that's the biggest limiting factor is the mindset. Like the strategies, you can go on Google, the techniques, all that, finding deals, every aspect, finding money, all that's available. But like the mindset thing is something that has to happen internally. And a lot of real estate investors don't talk about that. And since you brought it up, I'd love to learn your philosophy and how you've been able to manage that. Yeah,
I fall into imposter syndrome sometimes. I grew up with not a whole lot. My parents were awesome, man. They are awesome. My dad delivered newspapers in the morning and then was a mechanic. Nothing sexy, but he did what he had to do. Taught me a lot of work ethic. My mom dropped out of high school, went back, became a really well-accomplished paralegal. So I saw her going to night school. I saw her grinding. Like, she's been at McRae Harvey for, she just retired after a great career, man. Like, so my parents opened up a lot of doors for me, but I always thought that, man, like if I just work harder, I can win. I was watching my dad, like he just worked. If he could work 21 hours a day, then that's
the way to get ahead.
Yeah,
right?
that's what
just
I thought
grind.
it was.
Yeah.
Just go. Yeah. But the truth is you can't work 21 hours a day and be a dad and be a husband, or at least good ones.
Yeah.
And you can't be a good leader to other people. So for me, I just, that's one of the reasons we have a real estate team. I thought that we could go wider because there's enough for everyone. I want to bring people along with me on my bus. I want, and I know you feel the same way. Like, I like putting people in my bus if they're in a position where they can hit the goals that they want to hit. If I can help them get there, it's the best thing ever. It's more empowering to me to help them hit their goals than to hit my own. Like, that gets me up in the morning. So yeah, abundance there's opportunity everywhere. We are in one of the best areas of the country. I mean, goodness gracious, this is a fantastic place to be.
It really is, man. A lot of opportunity. So going back to, with growing up, seeing your parents working really hard to establish that, rich dad, poor dad, obviously sounds like that had an influence on the mindset of making money through investing, not just working, grinding.
That's it, man.
And then, maintaining that abundance mindset of just saying, there's so much more we can do as a team than on my own. Like having those, like there's like three things that I really saw there, that shift from working hard to working smart, kind of like, it's an old saying, a lot of people say it, but it has a lot of truth to it.
Going wide is good.
Yeah. What are you working on now? Cause a lot of people, it's like, I like to see the progression, and then where do you see we'll start what are you working on now? I always jump ahead.
Yeah. So like we have our real estate sales team. That's, we're pretty strong there. I've got great people in my organization. I love them. They love me. Like, we love serving together. We love giving back together. That's one portion. We have a property management company that we're growing very slowly and safely. I don't want to manage 900 units like that. So we're taking it slow. We haven't really even advertised it to many people. We have a flipping business, and we have an investor business. So like, I have offers on a few properties right now. I'm trying to find some flips, but we just finished a bunch of flips in Downingtown, and right now I'm finding some holds in other areas of the county.
So it's essentially 4 different businesses that all kind of all feed each other in a sense.
We have a title company. I have a partner. We have a title company. We have interest in an insurance company. I try to get the consumer in my web, show them how much we love them and care about them, make it relational, not transactional, and then keep them for life. It's so much easier to maintain an all-star list of clients and close people of a couple hundred people. You could do special things with them and really impact them individually, instead of trying to find people on the internet that are just trying to be random.
New business.
They're trying to be random,
yeah.
And they want to be anonymous for a reason. Like, I'm sure they could ask, if they had a realtor, ask somebody. So like, I want to keep the people I got. And
it's a great philosophy, and
it's more profitable, and it's more relational. And then people really get into your culture, and that's We want people in the culture to do it. That's how we find some of our investments, is they know what we do. We try to make it really personal. Every one of the flips we do, I take, due to IRS reasons, I have my little girls on my payroll. They're little models in my videos. People follow them. I've literally had people like make me T-shirts off of screenshots from Facebook videos of my daughters and send them to me. And I'm like, wow, this is really cool. We market. I have them market it too. You know, we have it is
tax write-off.
It is absolutely a tax write-off, and you can do a nice self-deferred IRA with those, which is very nice. And it's a blessing to my family too. At the same time, my older sons, they're 17 and 20 right now. They come with me. They look at the spreadsheets. They look at the numbers. I'm trying to give them that education that you don't get in social studies class. Like, let me teach you how to make money or how to help impact a community. How can we do that, right? So when we're flipping, when we're doing it, it's not always about the cash for us. You know, my wife and I, some of that's mission and ministry for us. Can I make this block a better place? Can I open the opportunity for someone? In my rental properties that we own about 40 doors. We put in all of our leases that you can break it if you want to buy a house. Break your lease for free if you buy with MGG. Like I'll
smart little tactic, right? And you're helping them. And
I want to empower them. I don't want them to feel like they have to rent their whole life unless they really want to. If we can empower people to home ownership, that's probably a better thing for them and better for their kids. And I always thought, I grew up renting a house here in Westchester. We lived right near the Fernhill Medical Complex. It got knocked down, but I always thought my family was just going to rent forever. I felt that, and I don't want other kids to ever think that that's, they're being limited.
Yeah, I love your passion in that. It sounds like you really want to give back and then create community and opportunity and help, bring everyone up.
Yeah,
right?
if you do that.
That abundance mindset's the opposite of that crabs in a bucket mindset, where you see someone doing well and you want to pull them down, right? And it's like,
that's insane.
No, I'm doing better. Let me pull some people along with me.
I think that's better. I think competition is really good too. And in the real estate sales business, I think about, right? Like, I want my team to compete against other worthy adversaries. I want to beat other teams that are in the marketplace. I don't want them to starve. No. I want them to do great. I just want to do a little better.
Yeah. It brings out the best in you.
That's it, man.
Right?
Yeah. Is my best better than yours? I hope. Maybe not.
Yeah.
Like, there's some really awesome businesses in our county. Like, there's some guys that are just killing it,
I really like your mindset on that, and I appreciate you sharing that, because that's the mindset of a successful leader team. Your business, your team is its own business, really.
It's
right?
Absolutely a business.
And that can only come from leadership, right? That top down mentality, and if it's not embraced in the culture of the team, it's going to suffer. So I know it's a lot to maintain that too. And it's not always, people always think, oh, I wish I was there. There's a lot that comes with it, but I heard the underlying things, which is giving back, I don't want to say charity. What'd you say?
Culture. Like Monday, we're having a March Madness event where we're donating money with the United Way. Yeah. We want to give back. And so if my agents don't want to be a part of that, then they're not my agents.
Yeah.
Then you can't be on my bus if you don't think that that's fun and a responsibility. Yes, leadership starts at the top. I'm always trying to raise my leadership lid. That's another great book. The John Maxwell book with the levels of leadership. But you look at the Washington football team, whatever they're called nowadays, the Guardians or whatever they are. You look at them and they're screwed up at the top, and they stink.
Yeah,
and
it trickles down.
It just trickles down. And I like that Dan Snyder's that leader in the Eagles division. But it's like, you watch that, it leaves a lot of clues. And you see other organizations that make good decisions, and it starts at top. And so that's a constant challenge for me. It's really, really, it's something that I've had to work on intentionally. It's really hard. It's not natural.
Yeah, it's not easy for anyone that's I kind of got put into a leadership role. I didn't really feel like I was meant for it or whatever, and have that same imposter syndrome that you mentioned, where it's like, I'm not this, that's not me, but then it evolves over time, and you're like, you have enough people telling you, yeah, you are a leader. And then you're like, I got to embrace this. There's more impact that I can have by stepping into this than
going wide. Right.
Yeah.
Same thing with you.
Yep. Well, I want to shift a little bit to, strategies for real estate investors, something that they can take away from this conversation, whether it be finding a deal, funding a deal, managing, rehabbing. What do you think are some of the biggest obstacles that you had to overcome that you could share that knowledge and experience to help them? And we can get as granular as you want.
Yeah, I think it's about getting in action and not overanalyzing the stinking thing. So many investors that look at everything, oh, let me think if this is going to happen, and what if this happens, and what if that happens? Start doing something. Imperfect action is better than inaction. It's always going to outperform. Like you can't, if you're sitting still and now it's 5 years later, you just missed 5 years of compound interest. You missed 5 years of tax deductions. You missed 5 years of appreciation of holding the property. I see people right now saying, oh my gosh, commercial money is at 7.25%. What I'm just going to wait for it to become 4 again. Well, you're going to be waiting a while. So
then when it gets 4 again,
yeah,
capital
I think the
markets,
price might go up. Yeah, you think. So it's exactly right. Yeah. And so you look at it and I say, man, the best day to buy a house was yesterday. Second best is today. You can always refinance.
So you're saying no matter what, get in the game.
Get in the game.
Don't ever overanalyze.
Don't overanalyze.
And
get a team around you. You get a realtor that you trust.
Yep.
Get someone who's done it before you, and have them mentor you and help you. It's a culture of the investor group. All of us that like to invest in properties, we have a little bit of a kind of a fraternity, and we would help each other. We help each other, and I think that overall most investors are abundance based because they've crossed that threshold of getting out of scarcity. I believe, and most of them, and so you can ask other people questions,
right.
and do deals with each other. It can actually be collaborative, neat.
Yeah.
It doesn't have to be cutthroat.
Absolutely. Anything else in terms of evaluating? Because you were saying don't overanalyze. So do you have any tips for analyzing? Or I know you said surround yourself with people.
Yep.
Just
when I
dive
get started,
into that. If someone's really maybe on the edge, they want to get started right now, or they're trying to scale up, but they just kind of feel stuck, and you say just get started. Well, sounds good, Matt. How do I do that?
Yeah,
what do I do?
Well, first, you need to have a couple bucks in the bank. You can't go into an investment thinking that you're going to put 3% down and call that a solid investment, because that's called loan fraud. If you go in there and get your FHA and you don't really live in it,
investment.
Yeah, but if you live in it,
yeah,
that's gold.
Right.
I'm teaching my kids to do that. I want them to go buy a house, and then sell it a year, and they got 30-year fixed assets. All about that life.
Yep.
But getting someone going. You need to have a standard. You need to know what do you want. And I think in the beginning, an investor should look at cash flow. I think it feels good. It feels good to them. It's important. It helps you scale and move to the next deal. So even if, for us, we need to have a certain amount of money a month per door, or I'm not touching it. It's usually, around $400 a door. If I'm not making $400 a month on a door, it better be in a really special zip code, and I'm okay with that. See, now I can do that because I have enough doors that I can choose to go dabble in a certain area that I'll get appreciation long term instead. Right. I can do that now, but in the beginning, no way. I'm a guy that wants to get the cash flow going, prove the concept a couple times, and then the bank likes you a little more too when they see that your portfolio is bringing cash.
Yeah.
Then they're
makes it easier to refi when the debt service coverage ratios work.
That's exactly right.
So what he's saying is very wise, because if you read Rich Dad Poor Dad, whatever puts money in your pocket is an asset, and whatever takes money out of your pocket is a liability. So you might have just bought this great rental property, but if it's negative cash flow, $500 a month, can you sustain that? And it still might be a great investment, right?
Long term, it might be great.
But initially getting started, this is a great way to get over that analysis paralysis. That if you put the numbers on the paper, the PITI, principal interest tax insurance, it's $1,000 a month. It rents for $1,400. Let's do it. And then it's let's figure out the details.
Yeah, we always
obviously
how quick can I get my cash back is how I analyze. We looked at 2 deals yesterday, and my wife and I, she's like the Rain Man person in our relationship, and I'm the practical one. We go out there and we're looking at it, and we have all these spreadsheets we're playing with. Oh, wait a minute. Okay, this we're going to get our money back in 6.6 years. I'm like, and so do we want to do that or not? Sometimes we will stretch that long. Sometimes we won't. Sometimes, I love to be 3 or 4 years. I like to get my money back. We've done some deals. We've bird some deals where we've gotten money back at closing.
Sure, yeah.
I'm sure you have too. And those are special, but you can't sit on the sidelines and waiting for that special one to pop up. They come along, but it's not the.
You got to keep moving. You got to get on base with the onesie twosies before you hit a
some
home
singles
run.
And a double, man. Yeah. What's wrong with a double?
Yeah,
double's great. You're in a scoring position. If you're not on base, then.
And now that you've got, established your portfolio, I know did you start with single families?
Yeah, I started with a twin in Coatesville.
Okay.
Yeah, I started with a twin in Coatesville, cash flow. The taxes were $1,200 a year. And it's easy to cash flow in places like that, but it's more volatile. You know, where there's cash flow, there's more volatility. More, you know, like my MS-13 crew. You know, I had to throw 25 grand in that place when I didn't have 25 grand. So I didn't like that. That was a good lesson.
Yeah,
that was a good lesson.
You're going to get a lot of lessons in this business, but that's good. It'll make you better.
Yeah, that's a $25,000 education expense. It's not deductible. Well, actually, it was deductible because I had to pay people to fix it, and it's a business, you know.
And now you're buying some multifamily as well now?
Yeah, we have a few multifamilies. We have 4 or 5 multis.
And was that a hard transition for you, or how did you what spurred that on?
What spurred on was I saw a deal that I knew would make sense. You know,
gotcha.
I was making enough cash flow from the smaller ones that I knew I could absorb the other one, even if I made a little bit of a mistake. You know, I like the idea of having one roof. You know, I have a couple 6 units right next door to each other, which is convenient for management. You know, we have a farm with a bunch of things, you know, in it. We've got some commercial space that we chop up. That kind of stuff, it's just a little safer. You know, it's if 5 of the 6 people are paying me on time, I'm still cash flowing.
Right.
Now, I don't have a lot of problems, you know. Praise God for that. I don't have a lot of collection problems.
Kind of funny how you think, you know, bigger is more risky. You know, but in a sense, it's kind of not.
It's actually safer.
It depends, right? But there's a factor there where it brings an element of, like you said, the vacancy on a 6 unit. You just have 1 vacant. Well, the 5 carry it.
That's right.
And they probably still cash flow even with 5.
That's it. We just did one in Downingtown. We put it up for rent yesterday. I need to rent that thing. It's a single. I need to rent it now. I don't. I'm absorbing the cold.
If it's empty, it's burning
the holding. Yeah, just burning cash.
What else? You know, what else do you think is important for people to look at? You know, for themselves getting into this, like, because I think a lot of people, it sounds good. You know, it's not really for everyone. I mean, I think everyone should have some real estate investing in their portfolio, but maybe they shouldn't be an active investor. Maybe they should be more on the passive end.
Yeah, and that's one of the reasons we started
with the management, right? It's like, because the management piece is hard. Not everyone's cut out to be a landlord.
Oh no!
And if you're going to be buying rentals with a third-party property manager, that's a big chunk of the equation, right? So
it is. I think that is, if you know you're not going to be a landlord, outsource it. You know you're not a mechanic, then don't put a new transmission in your car. Like, just know your lane, know where you're at. Now, you can learn from the property manager, or you can learn from, like, I know how to do the contracting in the houses, but I pay a contractor. I can't go fast enough. I need someone who does that for a living every day. So it's about the people that are in your circle. You need a team in order to invest well. You need to have the contractors. You need to outsource it to a property management company that has those things. You know, that's why we started that company, to create leverage for people in our database. I talked about trying to maintain like 200 awesome relationships. I want those people to grow wealth through real estate. And so we have a small private investor group that we have, and we meet and we go over things, and I bring an auctioneer in the room and a dumpster guy in the room, and everybody meets each other. We create a community. And I try to make it so stinking easy they can just plug and play. We have some clients that are, hey, Matt, I got 30 grand. Go make it work for me. And you just pick it. I'll look at it, but just make it make money. And we can do that for them.
Yeah, there's operators out there that can take capital and give you a great return.
Yeah, we have some people in there's a lot of different ways to do it. You don't have to flip. You don't have to hold. Like, I have some of my clients that are wealthy. They say, Matt, I've got this much cash, deploy it in the market. It's hard money. So like we'll go hard money with a good client brings a good deal to the table. We'll find the money. The money's actually the easiest part.
It is. It's just the cost of capital.
That's it, man.
Right. Yeah. There's always capital there. It's just a cost.
That's the thing. That's one of the roadblocks. You asked me about roadblocks earlier, and that is one of the big ones. Everyone says, I don't have the money. Dude, if you find a deal,
the money's there.
The money will show up every freaking time. And it doesn't matter how big the deal is. It doesn't matter at all.
For anyone that's listening that is never they're like, what are you talking about? You find the deal, the money's just going to magically appear. Let's walk through that, right? Let's walk through that, what it really means. So I just got this deal under contract.
Congratulations.
And I come to Matt and I'm like, look, I'm going to buy this for 100. I'm going to put 50 in it. I'm going to sell it for 250, right? After proceeds and holding costs and all that, let's say I'm going to walk away with 70 grand. And Matt has $150,000 sitting in his Roth IRA account, making no money. Hey, Matt.
We're losing money over the last couple of years, yeah.
Right. So, yeah, it could be negative.
That's right.
Hey, Matt, have you ever thought about investing passively in real estate?
Yeah, I have.
You have?
What does that look like?
Well, I have a property I'd like to purchase, and I know you mentioned that you're complaining about your returns on your retirement account.
Yeah.
If I could get you, a nice return on your retirement account, have it backed by a real estate asset, do you have any interest in that?
Well, how quick do you think I could have it back?
This project's probably going to take me about 6 months, but I'd want to have it for a 12-month loan just to be safe.
12-month term. Okay.
Yeah.
Yeah. And yeah, I think I could do something like that. I think we could do it. Now, would I be in first position on the, would we record the loan and be in first position?
So you already know, you'd be the mortgage company. So you'd be in a first
okay.
position lien. We would get you title insurance to make sure that you know that your title's clear, you're in first position, and then you'll have insurance.
That's great.
If
I'm
the
getting my money
burns down.
even if you don't do a great job on the flip, I'm still getting my money back.
Yeah, and I know we oversimplified it, but obviously that conversation could have went a lot smoother. But at the same time, you just ask the question, right? There's friends, family. There's also professional private lenders that will lend you 100%. There's hard money lenders that will lend you 100%. The cost obviously is all over the place depending on how you negotiate it. But
it really is.
When you said that's a big roadblock, that's a really big one for people to get out of the way in their own mind.
I think a lot of it's mental, and they say, "Oh man, I don't have 20% down. I don't have this. I don't have that." But if you have a screaming deal, someone will partner with you. It's better for you to partner with someone and get a piece of something than have 100% of zero.
That's a whole nother way too, like a JV. Just give them a piece of the deal.
That's it.
Yep.
Yeah, we do that with our real estate team. If we pull a deal together, I'll bring it to them and I'll try to raise capital in my team. We pay them back at 10%. And, I had an agent write me a $100,000 check for the last one. I didn't really need the cash, but I want my team to feel part of it. And it's great.
Yeah.
I love them and I want them. If someone's going to make the interest, it should be one of my people.
Absolutely.
Not the bank. So all right. So he made some money on his money, and he's a stock market guy, and he's like, man, the market went down 20% since I gave it to you. He said, it went down 10% since I gave it to you, and you're giving me 10%. I actually just made 20% of my money. Thank you. And he was a passive investor, never even went to the house. There's opportunities out there, and again, having a good realtor really helps. It really does. Don't get someone that has no investor experience if you want to be an investor.
You don't really want to go to a broke financial advisor, do you?
Nah, man. I remember I got solicited by a guy that was living in his mom's basement. I was like, dude, I can't give you what I have.
Yeah, you're a
if
great
you
guy.
haven't figured yourself out yet. I'll see you at the bar. We'll have a beer. But we can't do that.
So with that, Matt, how many people are on your team?
I think we have 13 at the moment.
Okay. And what areas do you guys cover?
We cover, I have a few agents on my team that are in Delaware County. Our primary focus is Chester County.
Okay.
We like to do that. I have one agent in the southern end. My director of sales is a Malvern prep guy, so we like that area. I have an agent on my team that's up northern Chester County. So when I bring people on, I try geographically, are you a fit?
Right.
Where can you add value to us? That's how we go wide. Some people like to just expand and open up a company in Harrisburg. Well, I don't know Harrisburg.
You don't know that market.
I don't know, man. I'm not an expert. I don't want to be.
Right.
But I can find a really good agent that maybe I could provide them some leverage. That's why you join a team, is leverage and lifestyle. Can I make your lifestyle better? And by using our services, by bundling into our transaction management, we can take all that nonsense away from you. If you're a good agent, I can get you leads. We can churn this thing. And so that's how we try to grow that way. Yeah.
So mainly Chester County, Delaware County. You guys do Montco, right?
We'll do some.
Yeah,
we'll do some.
Montco.
I think that realtors should not overstep their boundaries. I think going too far is a big mistake. You're not really doing the consumer a solid. I mean, especially on the buy side, you don't know things. On the sell side, you're looking at empirical data. You can look at comps. That's not as complicated, but from a buying perspective,
navigating the actual buying market, especially with the current environment.
That's right.
So for anyone out there that could potentially work with you from a real estate capacity, or what ways can you help someone, whether it be an investor, a buyer, seller?
Yeah, we do a lot of residential real estate. So it's primarily, hey, do you want to buy? Do you want to sell? Do you want to create wealth? Do you want to be one of those people that says, hey, Matt, here's 30 grand, make it work?
Yeah,
I love helping those people. I like trying to empower people and show that they can gain wealth for their families. That brings me a lot of joy. It's not always the most profitable thing in the world, but it doesn't matter. It really doesn't. And
it sounds like you're good at helping people navigate a plan, like coming up with not just, I want to invest in real estate. It's like, well, what do you want to do with that? Are you looking, because you mentioned depreciation, cash flow. So, I already heard that in the conversation where you take that consultative approach, which will be helpful for someone to determine their goals and what's good for them.
Yeah. I during that consult, I try to find out whether I think they'll be a good landlord or not. And then if I think they're going to be really, I had one of them on Tuesday this week. This guy is like super control freak. He's got great cash, got great assets, wants to diversify his life and his portfolio. There is no way this guy is going to be able to manage. So I started asking different questions, and I try to solve the problem for him.
Yeah.
Some people it's the cash. Some people it's I shouldn't be a landlord. Some people can't turn a screwdriver, and I just put the person in their life or the system in place to solve that problem so that they don't sit on the sidelines while the world's passing them by. Appreciation is happening every day. Are you going to not buy today because it's 7.5% or whatever it is? Because what are you, stopping your trajectory of wealth? Because the interest rate, just tell the kids, hey guys, we'll get that lake house later. The interest rate's not good. Let's stop. We don't really need to make those family memories right now. We'll get to you when you're a teenager. Well, there's no guarantee that's coming, so, try to live for today is really important too. My wife and I, we did that a couple years ago. We bought a lake house down in Tennessee, and it's a great place for us to go recharge, but we wanted our family memories to begin.
Yeah.
And it's like,
you can't put your life on hold for the market, for the weather, all this. You got to keep going. You got to
time
keep
the market. You can't look. How many people have been saying, "Oh, the interest rates are going to be better in March or April"? Good luck with that.
And there'll just be some other challenge then.
And then it's just an excuse.
Yeah.
And there, back to your point about mental. It's all there. And so, it's the rate. It's the market. It's what? It's you. Start moving.
So if you want to get into real estate investing and you have a bunch of excuses, it sounds like Matt's someone you might want to hang out with for a little bit. It doesn't sound like
I will squash those suckers. I don't do victim talk. Victim talk.
Yeah.
You can't be anywhere near me if you want to do victim talk. You are not my people.
Well, I love your no BS approach and really getting people in action, because I'm a firm believer that, like you said, action is just, it's where it's at. Like you could have the best strategy in the world, but if you don't take action, it means nothing.
That's it.
Or you could go take action and then figure out a good strategy that works, and over time refine it.
Yeah, it's contagious. The action's contagious. Now I have people on my real estate team watching us do this, and now they're like, wait a minute, I want to do one of these. I want to do one of these. And that's awesome. That's really cool stuff. We looked at 2 deals yesterday, and they were brought to us because we had a reputation in this little area that we've treated people right and that we've created a better neighborhood. So some people want to sell to us because they know we're not going to trash it, and we're going to do things the right way. We're not going to bastardize the house. We're not going to treat people incorrectly. And so that's all from action. Just by doing something, even if I didn't make much money on the flip down the street, if I still treated everybody right, the reputation comes up, and then
something good's going to come.
Yeah, man, something good's going to happen. Absolutely. Or maybe my contractors were busy. I lost a little money or something, but I bless these people that are awesome, and they got paid. It's all good.
Well, I appreciate you coming on today, and thank you very much for sharing everything. I actually got a lot of good reminders for myself, things that you hear, and but it's good to embrace it, right? And I really like your whole philosophy of giving back and really helping other people. That's really at the heart of what I heard in everything you said, and I think that's why you're where you're at and the success you have. So appreciate
nice
it.
Of you to say. Awesome. Thanks for having me today.
If anyone wants to reach out, we'll put Matt's info below, and thank you very much.
610 ball guy.
610 ball guy. There
that's
you go.
That's it, baby. Yeah, thank you very much.
Is that still live?
I have that live. That goes to the office.
Man, that's great.
Yeah, why not?
All right.
Got to make fun of it.
Yeah.
Cool. Thank you so much.
Thank you. Thank you for tuning in to the Investor Agent Podcast today. We hope you found it valuable. Please tune in weekly at theinvestoragents.com.